U.S. markets just opened 30 seconds ago. Silver $84.72. Bitcoin $66,166. Fear and Greed Index 5. The lowest reading ever recorded in crypto history. Not during COVID crash. Not in 2018 bear market. Never. And here's what nobody's talking about. $5.45 billion in Bitcoin short positions, sitting at liquidation levels. One move higher, and we're watching the biggest short squeeze in crypto history unfold live. OG John AG here. If you're new and your first instinct is this sounds like sensationalism, good. That's the reflex they programmed into you. Dismiss without verifying. The establishment profits when you react, not research. Before we go further, let me be crystal clear. I'm not here to hype you. I'm not here to panic you. I'm here to show you accurate, verified information straight from primary sources. If you want real data, not manipulation, hit subscribe. Comment John OG if you appreciate researched information over clickbait headlines. That support matters. This channel operates outside their control, which is why the algorithm buries it. You probably found this by accident, not recommendation. I don't need your trust. I need you to verify what I'm showing. Check the settlement documents yourself. Read the COMEX reports. Pull the COT data. The ones who actually do that, they realize it's not conspiracy when you can cite case numbers, fine amounts, admission of guilt in federal court. Current prices as I'm recording at 9:30 a.m. Eastern. U.S. market open. Silver Western spot $84.72, up 4.87% from yesterday. Gold $5,088, up 1.25%. Bitcoin $66,166, down 4% today. Shanghai silver spot trading $90. That's a $5.28 premium over Western spot. Verify this yourself on Shanghai Futures Exchange. It's public data. Here's what happened yesterday that mainstream completely missed. Jobs headline beat expectations. Markets rallied. Gold and silver got smashed on the headline. Standard paper manipulation playbook, but the revision data shows they systematically overstated employment by massive amounts. Again, January 2026 jobs, 130,000 added, beat the 55,000 expected. Markets celebrated, gold dropped, silver dropped. Except when you dig into the actual Bureau of Labor Statistics benchmark report, the revisions tell a completely different story. Prior year employment numbers revised down by 862,000 jobs. That's the biggest downward revision since the 2009 financial crisis. Total 2025 job growth, now cut to 181,000 for the entire year. That's 15,000 per month average. Compare that to 2024, which added 1,459,000 jobs total. This isn't economic slowdown. This is collapse disguised by headline manipulation, quietly revised months later when nobody's watching. 3 straight years, same pattern. 2023 revised lower. 2024 revised lower. 2025 revised even more lower. At one point, employment was overstated by over 1 million jobs total versus actual payroll records. Check BLS benchmark reports yourself. They're dated, verifiable, public. The pattern is systematic. Overstate on headline, revise quietly later. Gold and silver smashed on the fake headline have now retraced nearly all losses. Gold confirming breakout over $5,088 as I'm recording. The suppression didn't hold because fundamentals underneath are completely disconnected from paper manipulation. Now here's where it gets serious. February silver deliveries at COMEX just hit 18.72 million ounces from open interest of 19.11 million ounces. That's a 98% delivery rate. Let me repeat that. 98% of February contracts stood for physical delivery. This is not a functioning futures market where contracts typically roll forward. This is a physical allocation mechanism. People are demanding metal, not cash settlement. Check COMEX delivery reports dated February 3, 2026. They're public, verifiable, updated daily. Current March 2026 open interest sits at 85,000 to 91,000 contracts. That represents 425 million to 455 million ounces of paper claims. COMEX registered silver inventory, metal immediately available for delivery, currently sits at 103.5 million ounces, and falling. Do the math. If delivery rates stay anywhere near February levels, if even 25% of March contracts demand physical delivery, COMEX would need 107 million ounces, potentially more than will be available by first notice day February 27th. If the delivery rate matches January-February intensity 50 to 70% delivery intention, we're looking at demands for 200 to 300 million ounces against available registered inventory of 103 million ounces. Here's the smoking gun most people missed. COMEX registered silver has fallen from 167.7 million ounces in October 2025 to 103.5 million ounces in February 2026. That's a 38% decline in just over 3 months. The drainage rate has accelerated to 785,000 ounces per day. If this continues through February 27th, March 1st notice day, only 85 million ounces may be registered and available. When deliveries exceed entire open interest at contract start, that's physical overwhelming paper positioning. London Bullion Market Association just released January vault data. Silver held in London vaults, 27,729 metric tons at end of January, down 0.3% from December. Meanwhile, gold stocks rose 0.6% to 9,158 tons. The divergence matters. London gold inventories growing while London silver inventories shrinking. And this is happening precisely when silver just recovered from its worst single-day crash since 1980. That 0.3% monthly decline may sound trivial, but in a market running its 5th consecutive annual structural supply deficit, every incremental drawdown compounds the tightness. Physical silver is becoming increasingly difficult to source at spot prices. Shanghai Metals Exchange data shows something critical. Current Shanghai silver spot, $90. Shanghai futures, $93. Western spot, $84.72. Western futures, $83. That's a $5.28 to $8.28 premium, depending on contract. Check Shanghai Futures Exchange data yourself. It's public. Here's the timing signal most people completely missed. Shanghai Metals Exchange closes Sunday, February 15th through Monday, February 23rd for Chinese New Year. 8 days where the Eastern physical market setting record premiums goes completely dark. Historically, expect heavy manipulation attempts in Western paper markets during this window. Western banks know Shanghai bid disappears temporarily. They'll use it to push prices down, without Eastern physical buyers absorbing selling pressure. But here's what's different this time. China's silver market is in record backwardation, even before the holiday starts. The front-month contract on Shanghai Futures Exchange has climbed to record premium over the next active month. Large backwardation like this is driven by inventory crisis and depletion of deliverable material, investment bar demand and solar manufacturing draining stockpiles, short sellers paying deferral fees just to avoid taking delivery. That's not normal market behavior, that's shortage, plain and simple. The tightening in China coincides with broader hemispheric realignment of silver concentrate flows toward U.S. refining channels. Geopolitical supply restructuring amplifying physical stress in Asian markets while Western paper markets pretend everything's fine. Bitcoin $66,166 as I'm recording, down 47% from the $126,000 all-time high hit in October 2025, down 20% this week alone. Fear and Greed Index just hit 5. That's the lowest reading ever recorded. Not during the 2018 bear market, not during COVID March 2020 crash, ever. Here's what that means. Approximately $5.45 billion in short positions would be liquidated if Bitcoin rises by around $10,000 from current levels. Compare that to a move back down to $60,000, which would trigger about $2.4 billion in long liquidations. This imbalance suggests upward price movement could force short sellers to close positions, potentially accelerating a rally through short squeeze mechanics. But Bitcoin broke below the $70,000 level, triggering cascading liquidations. Over $1 billion in crypto positions liquidated in 24 hours. About $980 million were bullish, leveraged bets forced to close as price dropped. Markets currently price in roughly 60 basis points of Federal Reserve easing by year-end. Treasury yields barely moved. 10-year Treasury December 2025, 4.175%. January 2026, 4.173%. February 2026, 4.177%. Flat bond markets not buying the strong economy story when yields refuse moving, despite supposedly robust employment data. They're pricing what the revised data shows. Economic weakness eventually forcing Fed accommodation. Bitcoin also hasn't behaved like digital gold as bulls claimed. Gold up 24% since October. Bitcoin down 47%. Same period. That divergence matters. Real safe haven versus speculative asset becoming clear. Connect the dots, they're not connecting mainstream. 9 large U.S. companies filed bankruptcy last week. 3-week rolling average over 6 bankruptcies per week. Large corporate bankruptcies highest since COVID. Consumer debt defaults highest since 2017. Total delinquency rate 4.8% of all outstanding U.S. household debt. Q4 2025 highest in 8 years. Employment overstated by over 1 million jobs across 3 years. Corporate bankruptcies at COVID levels. Consumer defaults at 8-year highs. Yet entire commodity complex breaking out. Silver up 150% past year. Gold up 76% past year. Dollar down 10%. That's not recovery. That's currency debasement meeting supply constraints, while the real economy collapses underneath nominal price increases. Equity markets showing insane volatility. S&P 500 closed flat yesterday after whipsawing, Nasdaq down 0.35%, Russell 2000 down 1.25% after rallying on jobs headline earlier. Markets don't whipsaw like this when underlying data supports the narrative. This is positioning chaos while fundamentals deteriorate. December retail sales data released Tuesday showed activity unexpectedly stalled. GDP control group slipped 0.1%. Job openings fell to lowest level since 2020. Private payroll growth undershot forecasts. These releases collectively signal cooling demand, easing inflation pressure, lowering rate expectations, strengthening the case for policy easing later this year. Here's the technical signal most people missed. Silver dropped to $82 briefly and fell below the 150 exponential moving average on the hourly chart. If you've been here a while, you know this 150 EMA acted as solid support for weeks. When it broke lower earlier in this move, we saw price collapse hard from around $90 all the way down to the $63.90 overnight low that happened late January. But today, after some days of consolidation, price reclaimed that level. It's now back above the 150 EMA on the hourly. That's a structural shift. What was overhead resistance is now underneath as potential support. Does this mean silver's going to the moon? No. Does it mean price rockets higher from here? Absolutely not. Support needs confirmation. Price has to hold above it on retests. Volume needs to back it. Momentum needs to build. But this is another piece of confluence. The technicals starting to align with the fundamentals. We're seeing the $5.28 Shanghai premium, record backwardation in China, delivery pressure building into March 1st first notice day, February 27th. For paper traders especially, confluences like this matter. You want multiple factors lining up before taking position. This is not a buy signal. This is not what we do here. I don't give trading advice. I don't tell you what to do with your money. I share raw data, verifiable, public, straight from exchanges. I encourage you to use your own brain, do your own verification, make your own decisions. The ones who do that homework see the bigger picture. The ones waiting for someone else to spoon-feed them, they'll stay confused. The bearish case matters. Jobs data massively revised for full year, but January still showed 130,000 jobs added. Unemployment 4.3%. Not recession-level weakness in the current month headline. Markets can rally on headline strength for extended periods before revisions matter to price action. Silver volatility remains extreme. Moves both directions shake position traders before actual supply crunch forces delivery issues. March 1st first notice day still 2 weeks away. Contracts can roll. Positions can close. Cash settlement can be enforced. The system has more tools than most realize for avoiding delivery failures, even when physical tightness is real. Shanghai closes for Chinese New Year, creating manipulation window without Eastern buyers absorbing paper selling. Western banks can push price lower temporarily during that 8-day closure. The 150 EMA support could break again. Technicals could deteriorate. Price could retest lower levels before delivery pressure actually materializes. Corporate bankruptcies at 6 per week are elevated, but not 2008 crisis levels yet. Consumer defaults 4.8% are 8-year highs, but not catastrophic territory. Economy could muddle through stagflation without triggering crisis, forcing immediate monetary response. This is financial warfare education, not advice. Paper manipulation has persisted for decades despite recurring physical tightness. But here's the counter to every bearish delay. Every bearish argument assumes paper maintains price discovery control. That assumption is fracturing. Shanghai premium $5.28 to $8.28 depending on contract. That's not minor arbitrage. Eastern markets paying massive premiums for physical delivery while Western markets manipulate paper lower. When physical and paper diverge to that degree, paper pricing loses credibility. February deliveries already exceeded 98% of open interest. March sits at 425 to 455 million ounces of claims. First notice day approaching February 27th. If delivery intentions follow anywhere near February patterns, COMEX faces largest physical test in modern history. System can suppress paper, cannot print physical metal when buyers demand delivery instead of accepting cash settlement. Here's what matters now moving forward. February 27th, first notice day. March COMEX silver, 425 to 455 million ounces open interest against 103 million ounces registered inventory currently. Shanghai premium, $5.28 to $8.28, signaling physical disconnection from paper pricing. Chinese New Year closure, February 15th through 23rd, creating potential manipulation window. Employment data revised down 862,000 jobs. Systematic overstatement pattern 3 years running. Corporate bankruptcies, COVID-level highs. Consumer defaults 8-year highs. Commodities breaking out despite economic deterioration underneath. Technical structure, 150 EMA support reclaimed. Potential shift. Fundamental structure, delivery pressure coiling. Geopolitical structure, East accumulating physical at premium while West manipulates paper lower. Watch what happens during Chinese New Year closure, February 15th through 23. Watch delivery intentions leading up to February 27th. First notice day. Watch whether 150 EMA technical support holds or breaks on retests. Watch Shanghai Premium when markets reopen after the holiday. Verify the data yourself. Employment revision data in BLS benchmark reports. COMEX delivery statistics updated daily. Public Shanghai backwardation data on futures exchange. Bankruptcy filings public record. Consumer debt statistics. Federal Reserve data. Don't trust the jobs headline. Don't trust my analysis. Trust primary source data. Verify independently. The ones who do that homework, they see what's building. They understand why delivery ratios matter. They know what persistent premiums mean when they won't close arbitrage. They recognize the pattern when employment gets revised lower, 3 years running by over 1 million jobs total. The ones waiting for comfortable mainstream explanations. They're not my concern. I'm not here to convince anyone or predict what you should do with your capital. I'm here to show you the data they're not connecting. What you do with that information is entirely on you. The warning isn't a buy signal. The warning is verify or stay blind. Your choice. If this researched, verified information is valuable to you, subscribe to this channel. Comment John OG below to show support. This takes hours of data analysis pulling from primary sources. Your engagement helps this reach people who want real information over hype. Invest with logic, not emotion. OG John AG out.